if these technologies were applied, look at what happens to liquidity. Look at what happens to access to the market. How do we bridge that gap? Well, it comes down to evidencing in a legal fashion the things that we're claiming. This token represents a share of stock in a company. This token represents a gold deposit in a treasury somewhere.
Hey everybody, Tanner here with WAGMI Ventures. On today's episode, we have Michael Hiles, founder and CEO at 10XTS. For anyone who's new, this is the WAGMI Ventures podcast, where we do snapshots with interesting founders from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. But for now, let's get into it with Michael at 10XTS. All right. Hey, everybody. I'm here today with Michael Hiles, founder and CEO of 10XTS. Michael, how are you doing today?
Hey, Tanner. I'm doing great. Thanks so much for having me here.
Yeah, thanks so much for coming on. I'm really pumped to chat. I know we have a ton to talk about and a ton that's honestly like super, super relevant to what's going on kind of in the space today. So no, it's going to be a good conversation. Maybe to start, we could just jump in on really like what brought you to Web3 to begin with. And then also, how did you get around to launching 10XTS? What was the kind of origin there?
Great questions. So I'm Gen X, a little bit more gray hair in my beard. Started coding in the late 70s as a little kid on literally mainframes. Back in the old days, I was fortunate my dad worked for a software company in the 70s. So it's like one of those strange stories that define my life going forward. I spent a lot of time in information architecture, data architecture and design, and ended up working in my pre-blockchain career heavily in the government sector, working specifically with large, gigantic knowledge management data sets, and specifically in the judicial court systems as a contractor to the public sector, working in public record systems. So it was an easy transition for me, seeing all of the interesting things going on as an engineer. Of course, I've been through several, industry cycles of just the evolution of the web and mobile, and, saw early on the potential that Web3 technology had. And then, of course, the ICO, funding of early stage companies started to crop in, and knowing that at some point that there would be an inflection where regulatory compliance would collide with the approach. So, crypto proved some very interesting theses around, just financial instruments and portability and global marketplaces and, all of the cool stuff. But then, what's the opportunity to now take that to traditional finance markets and bring innovation within the regulated space? And that was really the genesis of 10XTS and building XDEX as a governance risk compliance portability system to enable beyond just the token or the digital asset itself, but embedding the necessary legal recordation into the asset, the transaction, from a compliance and recordation standpoint to make an asset provable, and how to make these things conform to regulated markets in global jurisdictions everywhere.
Very cool. So, from a kind of 10,000 foot view, how would you describe what 10XTS is building and kind of really like what problems are being solved? If you were explaining to kind of a layperson, what are the problems there? What are you guys solving?
Well, the vision of blockchain in general, of course, is, financial inclusion and, accessibility to assets and, all of the things that are fundamentally inherent to the technology itself. 10XTS seeks to build a global ecosystem that ultimately benefits economic growth through capital markets inclusion. And that's kind of at the top from a vision standpoint. So now how does that break down into the practical everyday of what we do? We ultimately are building a global distribution system that is interoperable between institutions so that, like you can transfer a crypto asset from wallet A to wallet B instantaneously across even global jurisdictions, right? The problem is as soon as you apply that technology, the underlying technology, to other types of asset classes, i.e. real world assets, tokenized securities, et cetera, it drags along with it a very significant body of recordation that must be persistent and maintained. And that's ultimately what we're building, an interoperability network that allows institutions to generate and ingest the governance of risk and compliance, legal artifacts and record aid that make an asset provable, makes an identity, beneficial ownership recordation component that must be reported. All of the things within global jurisdictions that are necessary for traditional asset classes. How do you then make those assets behave more like cryptocurrencies while maintaining the regulatory compliance and the persistence of the legal construct around that asset and those trades?
Fascinating. Yeah, that makes a ton of sense. So you mentioned XDEX. Can you talk about that and kind of the two products listed on your website around XDEX, where it seems to be kind of focused on assets and network?
Yeah, that's correct. XDEX is really it's a blended stack of both chain, on-chain, and non-chain data. It's actually a private permissioned network. Our goal is, because it's institutional compliance information, it's really supported as a network by our institutional partners. And then, of course, we have the asset component, which is issuers of a security or a real world asset that wish to maintain a master data management strategy for themselves as issuers to keep track of all of the legal information that's necessary. As an issuer, it's really their information as an issuer, and it's their investors' information as investors in that asset, and making an interoperable master data management platform that allows that seamless exchange of that next level of information beyond just the ledger itself is very important. So all of the governance, risk, compliance that's persistent and necessary can be made as equally portable and still be maintained by that issuer for their asset.
Got it. Got it. So I might be misunderstanding how this works, but how does, you mentioned interoperability a couple times. I'm curious, how does what you're building interact with existing L1s or L2s?
Well, we're fairly network agnostic in our approach. Call us an extended oracle from at least the chain standpoint, but you're also dealing with a large body of information and recordation that is non-chain data. Every jurisdiction has its own specific requirements, filings, reports, and that's across not just from an issuer standpoint, but that's, broker dealers, transfer agents, marketplaces, et cetera. And it's really common information largely. It's standard information, but in traditional markets today, when you understand the evolution, the very slow historical evolution of market structure and how markets have functioned, now we have this advancement of cryptocurrency and the tokenized forms of digital assets. It really comes back to making that information as equally interoperable across organizations, which are notoriously terrible at actually tracking their own information internally. And I can say this because I have an entire career of helping organizations better manage, archive, and access and file and maintain very, very massive compliance records data sets. So that's really at its core of the innovation itself, is applying a categorical structure to even cross-jurisdictional interoperability. We spend globally $700 billion a year to simply reconcile cross-border asset transfers in traditional financial markets. That can be compressed to the click of a button when properly aligned with this type of an approach.
Fascinating. Yeah. Is it fair to say that for real world assets to really take off, something like 10XTS has to really be kind of in the infrastructure to make that possible at scale, at least, because of some of the things you've already mentioned? Is that, from your perspective, is that a pretty fair thing to say?
That is correct. And once again, it goes back to the issuer being in control of their data and defining a master data management strategy around their governance, risk, and compliance record set. As a digital transformation exercise as an issuer, whether it's the CFO or the CEO, the compliance officer, somebody says, we really want distribution of our asset, because that's really what people want. They don't care about the technology. They want distribution, right?
Sure.
They want that asset to list and trade. And arguably, for the first time in human history, a Bitcoin was the very first financial instrument that could be globally, instantaneously transferable, list and trade simultaneously in multiple global marketplaces, even settle at different prices, right? Think of where the industry would be if you could have only ever bought Ethereum at the Ethereum website and only ever sold Ethereum at the Ethereum website. You
Right.
would not have the global ubiquity that you have today. And to a large degree, that's what attracted market makers and the liquidity so quickly into the market space. So now we're looking at other asset classes saying, well, why can't real estate? Why can't commodities? Why can't private equity, strips of private equity funds? Why can't they trade with the same type of efficiency and bring liquidity into more nascent asset classes initially, but then even simultaneously registering and trading public reporting shares of stock in multiple simultaneous marketplaces globally. It does start with the issuer 100%. It is an issuer strategy and then allows the institution to then ingest that information quickly, seamlessly into their onboarding listing processes, and then further downstream allows a more efficient, simultaneous, real-time, multi-party trade settlement between the actors that are required under the law. A broker-dealer, a transfer agent, a custodian, they can all interact simultaneously at the smart contract level by exchange and use of the common compliance data that's necessary around that transaction. That's absolutely what we facilitate.
Yeah, fascinating. So I want to get your thoughts on something that came up on this podcast actually early on, kind of in the early days, where it was Blake West, co-founder, CTO at Goldfinch, which is an on-chain lending protocol. I was kind of asking his thoughts about some similar topics, and he went on kind of a separate sort of rabbit trail where he was talking about on-chain, a lot of the stuff that you've kind of been mentioning, but also, potentially off-chain kind of mediation and arbitration, because crossing jurisdictions is so challenging, basically. So if we're trying to do this stuff globally, basically introducing kind of a human element may be something that could be helpful. And it sounds like from what you're saying that, it might be possible through what you guys are building to kind of, circumvent that route, which I think a lot of people in crypto would be actually like very predisposed towards, because introducing the human element is inevitably introducing a trust element that if you can sort of go around that technologically, that would be ideal. But, you can't, yeah, I'll stop there. So I'm curious, how do you interact with what Blake said in light of kind of what you guys are building and what's possible through XDEX and 10XTS is building?
Well, my apologies for not actually having listened to that specific episode, and you've piqued my curiosity, so I certainly will go back. So it'll be tough for me to specifically respond to you guys' conversation. I think the most important thing to keep in mind is that there are laws in every jurisdiction that define how markets operate: good, bad, ugly, and different. And to a large degree, the operations at the compliance level are well defined, or at least defined enough that there's some form of reporting. And I believe that because you're dealing with, inherently at its core, a trust-based technology with mathematical provability of the data and the information, the origination, it comes down to the ability to now make the extended legal recordation that defines what is an asset, what's a limited partnership unit, right? I mean, it's an esoteric legal construct that attorneys commit to paper that become the legal fiction or the legal form of the entity, and then ultimately the offering and then the purchase of this particular asset. Those artifacts, those legal records, are ultimately what define the asset itself. How do we make those trustworthy, specifically between institutions, and then ultimately automated, right? Compliance, while from an auditability standpoint, is still largely a human powered process. How can that be embedded in such a way so that it can execute over and over and over, rinse repeat, because it's programmatic? There is no violation possible. There is no oversight, overlooking something. Even the regulatory oversight is specifically auditable on a near real-time basis with this technology, as just even cryptocurrency tools have proven. So I think that that's really what's important is to think outside the box and say, hey, How do we make more than just the token on the ledger provable on an immutable basis? How do we make it as seamless and accessible for authorized entities, institutions to maintain the level of trust in that asset itself?
Yeah, that makes a ton of sense. And honestly, as you're even speaking, I'm realizing I kind of butchered I butchered Blake's argument a little bit, or his digression. So that's really, really helpful, kind of despite that on my part. So maybe pivoting here a tiny bit. I'm curious. I mean, the past 2 months, say, I mean, the whole past really like 2 years have been crazy from a regulatory perspective, but the past couple of months have felt especially tumultuous and especially emotional for people, as there's just been so much SEC action going on. And I'm curious your thoughts on just, really, I guess a micro question and then kind of a macro question, where the macro question would, of course, be, what are your thoughts on just all of what's going on right now? Micro question might be, this past week, even some of the things in our kind of chat beforehand that you'd mentioned as sort of the big news. Like, how would you comment on some of this activity over the past week?
Well, regulation, number one, is driven through largely complaint and enforcement. So we have the investor protection rules today that are the product of many, many years of lessons learned and bad actors in traditional financial markets. And so, on the cryptocurrency side, I hear a lot of, well, banks are bad too, so therefore use crypto. But we see a lot of investor protection related issues that are going to be the dog whistle for the regulators to come in and really start to peel the onion. Now, I happen to believe that, even under Howie, a good friend of mine is Lee Schneider at, Ava Labs, general counsel, and he's always posited the argument. And he's had a number of progressive conversations over the years with the SEC as a prominent attorney in the space. Under Howie, the oranges themselves never were the securities, right? It was the contract that purchased the securities, or the crop share, that was the security, but the oranges themselves never became the security as a product of that. So it'll be interesting to see, how that argument makes its way through the court system. I think the SEC obviously has a strategy and they're going after it. I'm not conspiratorial in any way, shape, or form, other than watching closely to see, where the industry versus the regulators versus the politics, all of those things land. We saw early on that the rubber meeting the road in the United States specifically was going to be qualified custody of tokenized financial instruments. Leave cryptocurrency out of it. We're just talking about good old fashioned 15C3-3 qualified custody of securities that just so happened to be enumerated in a new digital format. And where were we going to be, right? So in the past week, you've had, even announcements that prominent custodial players in the space are in trouble here in the States. We saw that early on and decided, when Wyoming changed their laws and enabled the special purpose depository institution charter, we incubated the team and spun out as a completely independent institution what became one of the Wyoming SPDI bank charters, and obtained approval. And so Commercium Bank is working its way through the approval process in the state to become a qualified custodian that just so happens to operate on a more automated digital rail, which has nothing to do with cryptocurrency, quite frankly. And I think everybody associates Wyoming SPDIs, Speedies, as crypto banks. And that's really, we're coming at it with common technology, but a completely different approach under the law. And that's still going to be a requirement under our current regulatory regime in the United States. And I don't anticipate the requirement for a qualified custodian for a security to change or go away anytime soon. Now, as a result of a lot of the lean in, I think, that you see from the United States, there's a lot of cryptocurrency, focused companies that are eyeballing offshore. But what's interesting is we also have probably as many offshore initiatives in other jurisdictions, all the way up to the government regulatory overhaul of infrastructure level of conversation. Just like mobile allowed places like Africa to leapfrog the traditional data connectivity ecosystem. Now there's another opportunity for emerging nations to completely overhaul their compliance and regulatory infrastructure to a modern format, highly modernized, highly efficient. And you've got a number of nations that are saying, yeah, this is the way that things should probably go. which excites me to no end because I see, the future of many markets being, you know, Africa, right? That's a big focus for us is how do we help emerging economies embrace this technology and adopt?
Yeah, all of that is fascinating. I think one thing that's really especially interesting about your perspective is how much, because I think one thing in sort of blockchain world, crypto world, is that there is sort of this antagonistic or adversarial relationship between or perceived or real between regulators and the space, right? And the actors in the space. And I think one thing that can be lost sometimes is, some of what you're talking about, where some of that legal architecture that's necessary for prosperity, that with it, things can go really well. And without it, or with, lack of clarity, like I think some would say, it can be complicated. But I think specifically of this book, The Mystery of Capital, by, I think it was Hernando de Soto, where he's looking at informal economies across the world. And if it's so complicated to get legally kind of legibly into the economy, it means a lot is off the table in terms of, kind of like you mentioned, access to capital, all kinds of things. That I guess all of this to say, I find your perspective on, basically having a lot of respect for and trying to integrate with the legal side of things to be really actually like kind of a fresh breath of fresh air. I'm curious how you would comment on all
Thank
of
you.
that.
No, I appreciate that. Thank you, because it's been a lonely, lonely road.
Yeah, I can
We've been
imagine.
we've been the pariahs of the crypto space because we're regulatory compliance people, and nobody wanted to talk about regulatory compliance. And then conversely, we were the pariahs of the traditional finance space because we happen to use, the, you know, terrible, evil blockchain technology. I believe that has shifted now. When you see the big banks and folks, launching, EDX, for example, the big announcement that you've got some
Right,
massive
right,
players that are now taking it on, and the first ETF approval announcement, some really significant things are taking place. And even at Davos earlier this year, the discussion was blockchain, not crypto, right? Everybody's on the train about efficiencies that can be found by innovating within the law. It's certainly a continued progression, but you can't throw the baby out with the bathwater, so to speak, which is I think what a lot of the crypto revolution early on sought was the revolution as opposed to the evolution. And then you go back to even the history of markets. How did markets even evolve, right? The people physically got together in a marketplace and traded, and it was recorded all the way back to cuneiform on mud tablets, right? And then it became stock
right.
certificates in the 1800s. And then finally, in 1976, when the Cincinnati Stock Exchange was the first to adopt computerized trading, that led to the modernization of market systems that still exist today. But they're still very highly centralized. They're very exclusionary. It's very complex to list an asset, to trade an asset, and that leads to pockets of liquidity, right? DeFi and crypto, while it may not be fully regulatory compliant, the thesis shown through that if these technologies were applied, look at what happens to liquidity. Look at what happens to access to the market. How do we bridge that gap? Well, it comes down to evidencing in a legal fashion the things that we're claiming. This token represents a share of stock in a company. This token represents a gold deposit in a treasury somewhere, right? That's really what we sought to focus on as a company and bring to the marketplace that we believe is kind of the threading the needle to a certain degree that bridges the gap between, the purely innovative new revolution and then ultimately the slower roll evolution from, traditional market infrastructure to the future.
Yeah, that makes a ton of sense. Okay, so a couple last questions for you here, Michael. I'm curious, if I were to say the future of crypto is blank, how would you fill in the blank from your vantage point?
Well, it depends on where. I think that the future of crypto in the United States has been well telegraphed by the federal government. They're looking to threaten, on one hand, the compliance side of institutions that seek to interact with layer one networks. And there's a trail there that ultimately lands back at the Treasury Department, OFAC, BSA, FATF. And then you have the other trend, which is the large institutions that are finally saying, you know what, we're big enough, we've got it well defined enough, we've created a big enough balance, we think, to launch forward on some of these initiatives. Sadly, that favors the entrenched, institutions, and a lot of earlier stage companies that have sought to emerge in the space are going to find a tougher time. Internationally, it's game on, right? There are so many jurisdictions that are embracing even cryptocurrencies. I've got all the way up to El Salvador, and the experiment in El Salvador, which has been argued is not a success. Knowing those metrics, I think it's a runaway success because they ultimately wanted to bank the unbanked businesses in El Salvador. It wasn't about the bonds necessarily as the long tail. There's 2.7 million merchants in the nation of El Salvador and only 35,000 business bank accounts. And so back in October of last year, the metric that we got was there was about a 23% adoption rate by those merchants. I'm talking like street kiosk operators, right? They now have the ability to facilitate a digital form of payment. That's huge. It goes back to the economic inclusion, the financial inclusion, the ability to instantly access monetary markets, global markets. And these are the first steps. And I think a lot of other jurisdictions are well down the road. And I hope to see the United States find a balance sooner as opposed to later that doesn't disfavor the small innovators in the space and completely just cedes over the future of the evolution continuation to the massive entrenched players. I think that there has to be an eye towards the innovation balance along with the existing pursuit by the entrenched traditional finance markets.
Yep, that makes a ton of sense. So, Michael, what would your advice be for other founders building in the blockchain space? Kind of from your experience, you mentioned, moments of loneliness kind of along the journey for the reasons you mentioned. I'm curious, from your unique experience, what would you say to yourself kind of, if you could impart some wisdom early on to yourself, to any others who might be coming into the space around this time?
Solve a problem first and foremost. I mean, the technology is cool, but we've seen so many projects that sprinkled the tech on and tinsel on a Christmas tree, and it didn't actually solve a root problem. It was just, hey, give us a whole bunch of money and then we'll go figure it out. Solving problems is hard, right? It requires so many conversations with the market and, talking to potential customers, partners to really understand at its core what is the problem, and then how can we solve the problem, as opposed to having a hammer and everything looks like a nail, right? And that allows you to think outside the box. As far as founder advice goes, it's a lonely existence. It's sadomasochistic. Don't do it.
Got
And
it.
if you're going to do it, hang in there and persevere, because that's you only fail when you quit.
Yep. Love it. Okay, Michael, what's your team working on right now, and what's the best way for people to kind of follow along on the journey?
Yeah, so right now we're securing a lot of institutional participation in the network. We've got a lot of fantastic, both domestic U.S. as well as international opportunities in front of us. The team's hard at work at continuing to build out the network with the focus on the interoperability of the compliance layer. And getting a hold of us is real easy. 10xts10xts.com, and we're on all the usual social media channels, and we're ready and waiting to help folks solve first and foremost their asset distribution issue from an issuer standpoint, and then ultimately institutions that are looking for a balanced, compliant approach to intersecting in this ecosystem. Very happy to talk to folks about enterprise level of solutions as well.
Perfect. Michael, thank you so much for the time. Fascinating conversation and a lot to think about for the listeners as well as myself. So have a great rest of the week here and take care.
Appreciate it. Thank you, Tanner, for the time.
All right. Bye-bye.